Welcome back, my friends. The news today is that Berkshire Hathaway operating earnings jumped 28% in the fourth quarter. And its cash pile has surged to record an all-time high. Berkshire Hathaway is the largest and best-known conglomerate in the world today. Its holdings include entire companies, like Geico and the Burlington Northern Santa Fe Railroad, as well as stakes in public companies like Apple and Coca-Cola. Berkshire Hathaway posted operating earnings, which refers to profits from businesses across insurance, railroads and utilities, of $8.481 billion in the fourth quarter. Operating earnings rose to $37.350 billion in 2023, up 17% from $30.853 billion in the prior year. Berkshire held $167.6 billion in cash in the fourth quarter, a record level that surpasses the $157.2 billion the conglomerate held in the prior quarter. The main reason that Berkshire Hathaway holds so much cash is because it cannot find investable assets that it deems to be worth investing in. And, Berkshire Hathaway's cash is held in short-term U.S. Treasuries, which are now getting a higher rate of return than 3 years ago. But, before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And, please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Berkshire Hathaway on Saturday reported a big rise in operating earnings in the fourth quarter, thanks to huge gains in its insurance business, while its cash pile expanded to record levels. The Omaha-based conglomerate posted operating earnings, which refers to profits from businesses across insurance, railroads and utilities, of $8.481 billion in the quarter ending December. That's 28% above the $6.625 billion from the year-ago period. For the full year 2023, that brought operating earnings up to $37.350 billion, up 17% from $30.853 billion in the prior year. Berkshire also held $167.6 billion in cash in the fourth quarter, a record level that surpasses the $157.2 billion the conglomerate held in the prior quarter. Berkshire Class A shares have rallied roughly 16% this year. The CEO of Berkshire Hathaway is the legendary 93-year-old investor Warren Buffett, who is often colloquially known as the Oracle of Omaha because he is based in Omaha, Nebraska. Details on investments held by Berkshire Hathaway are closely watched worldwide because many investors are very interested in what Warren Buffett sees as investable and how he views the world. Geico, the auto insurer considered Buffett's favorite child, reported a profitable year, with net underwriting earnings of $5.428 billion in 2023. The improved earnings were driven by premium rate increases and lower claims last year. Meanwhile, Burlington Northern Santa Fe, BNSF, reported full-year net earnings of $5.087 billion last year, a 14% drop from $5.946 billion in the prior year. Insurance underwriting surged to $848 million in the fourth quarter, spiking 430% from $160 million from the year-ago period, driving operating earnings for the conglomerate. Insurance investment income also rose to $2.759 billion on a quarterly basis, up 37% from $2.0 billion in the same period in the year prior. But operating earnings from railroads fell in the fourth quarter, as it did in utilities and energy. Operating earnings from railroads dropped to $1.355 billion, down from $1.469 billion a year ago. Operating earnings for utilities and energy fell to $632 million, down from $739 million the prior year. Overall Berkshire earnings, which include the company's investment gains from publicly traded companies, more than doubled during the quarter from the year-earlier period, reaching $37.57 billion. For the full year, overall profits came in at $96.22 billion. The conglomerate, however, included its usual disclaimer advising investors to look past fluctuations in quarterly results. We believe that investment gains and losses on investments in equity securities, whether realized from dispositions or unrealized from changes in market prices, are generally meaningless in understanding our reported periodic results or evaluating the economic performance of our operating businesses. Read a statement in the annual report. Warren Buffett says Berkshire may only do slightly better than the average company due to its sheer size. There remain only a handful of companies in this country capable of truly moving the needle at Berkshire, and they have been endlessly picked over by us and by others, Buffett wrote. Outside the US, there are essentially no candidates that are meaningful options for capital deployment at Berkshire. All in all, we have no possibility of eye-popping performance, Buffett said. And this has been a theme from Warren Buffett for decades now, focusing investment almost exclusively on the United States. In fact, I was very surprised when he invested in 4 Japanese trading companies, because it runs counter to this long-held principle. Berkshire Hathaway's Warren Buffett said his sprawling conglomerate may only slightly outperform the average American company due to its sheer size and the lack of buying opportunities that could make an impact. The Omaha-based giant, owner of everything from BNSF Railway to Dairy Queen and 6% of Apple, has by far the largest net worth recorded by any American business and now reached 6% of that of the total S&P 500 companies, Buffett said in his annual letter released Saturday. The last sizable deal Berkshire did was buying insurer and conglomerate Allegheny for $11.6 billion in 2022. The Oracle of Omaha has also acquired a 28% stake in energy giant Occidental Petroleum, while ruling out buying the whole company. These moves, while significant, didn't live up to the expectation of an elephant-sized target that Buffett has been wanting to make for years. Berkshire held a record $167.6 billion in cash in the fourth quarter. Outside the US, there are essentially no candidates that are meaningful options for capital deployment at Berkshire. All in all, we have no possibility of eye-popping performance, Buffett said. Berkshire did build a 9% stake in 5 Japanese trading companies, Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo, which Buffett intends to own long-term. The 93-year-old Buffett said Berkshire's group of diversified, quality businesses should provide slightly better performance than the average US company, but anything more than that is unlikely. With our present mix of businesses, Berkshire should do a bit better than the average American corporation and, more important, should also operate with materially less risk of permanent loss of capital, Buffett said. Anything beyond slightly better, though, is wishful thinking. Berkshire recently hit consecutive record highs, trading above $620,000 for Class A shares and boasting a market value above $900 billion. The conglomerate stock has gained about 16% in 2024, more than double the S&P 500's return, after climbing 16% in all of 2023. My overall assessment is that, in order to outperform the market at its current size, Berkshire will need to focus more on inventing and operating. For example, if you compare Berkshire Hathaway to big tech companies, many of the big tech companies count on bringing new products and services to market each year to drive growth. Berkshire Hathaway does a little of this in its energy subsidiary, but not a lot of it. And, as far as merely investing, it has to compete with a lot of other deep-pocketed investment funds from around the world. And, in a world where geopolitical tensions are rising, US assets are more coveted than ever. And, that has been one of the major drivers of the US stock market and single-family houses. So, we will look forward to the annual letter from Warren Buffett, as well as the annual shareholder meeting later this year. But, what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And, before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school. As well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So, be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.